NIO shares surged 10.43% after the company issued a surprise profit alert that signaled a potential turning point in its long-running profitability story. On February 5th, 2026, NIO forecasted its first ever quarterly adjusted operating profit, projecting between $100 million and $172 million for Q4 2025, a milestone that immediately reignited bullish sentiments across the market. The upbeat outlook is being driven by a combination of record vehicle deliveries, improving margins, and tighter cost control. NIO reported quarterly deliveries of more than 70,000 vehicles, up roughly 30% year over year, reflecting strong demand across its core NIO brand, as well as continued traction from its newer sub-brands. Investors are particularly encouraged by management's comments that growth is increasingly coming from a richer product mix, with higher priced models such as the ET9 premium sedan contributing a larger share of sales. Gross margin is expected to rise to approximately 12.5%, a meaningful improvement from prior quarters, supported by better scale, pricing discipline, and a more efficient supply chain. At the same time, NIO has trimmed operating expenses, citing lower R&D spending intensity, streamlined headcount, and improved procurement terms, all of which helped expand operating leverage. The market reaction was swift. Trading volume jumped more than 200% above its daily average, suggesting heavy institutional and retail participation as investors repositioned around the possibility that NIO's years-long investment phase may finally be giving way to sustainable profitability. Within the community, bulls view the forecast as validation that NIO's strategy, premium positioning, battery swap infrastructure, and a multi-brand portfolio is beginning to pay off. Some are now speculating that a sustained profit trajectory could prompt a valuation re-rating and attract longer-term capital back into the stock. Bears, however, caution that China's EV market remains intensely competitive and that maintaining margins will be challenging if price wars reemerge. Overall, the profit alert has reshaped the near-term narrative around NIO, shifting the conversation from survival and cash burn toward execution, scalability, and the durability of earnings, making the upcoming earnings report one of the most closely watched in the company's history.
Okay, so the stock is up 7.69%. This is Friday, the 6th of February 2026. 43 million shares have crossed the tape. 50-day average is around 46 million, so it's going to be a big day for the stock. Heavily traded. I think options traders are over the last 50 days they have been active. Okay, so the stock has been consolidating within a longer term bullish trend. Yeah, its 200-day moving average here is still sloping bullishly upwards. It underscores its underlying trend. And as things stand right now, it has an upper projection of 5.13. The extrapolation is saying that the strength it has picked up now, we may remain in place up till Tuesday the 10th. Okay, so this is the second straight session of gains for the stock, and then from the 11th, it's there's an indication where it may contract. So it's all in the same consolidation. It's still within this extrapolation, still re-emphasizing the consolidation that has been playing out since early this year, at the whole of January up to now. So, but after that, it's saying that there's an indication that it may expand decisively and maybe reach the highs of around 5.51. Okay, so let's see, its market grid is indicating the stock is way outside of its market grid. That the grid is between 4.91 and 4.49. We have to look at the 4-hour chart, but before that, by some measure, by some indication, it's indicating here that maybe there's a chance it might pull back towards 4.91 or even continue to advance. On the 4-hour chart, I think we may have, yeah, here it's also still outside of the market grid. Yeah, 4.88. So it's pretty much the same sort of support 4.88, 4.91. Sorry, it's 5.5. 5.5 is the stock is at 5.09, so and the market grid is at 5.05. So even more of a small support ahead of 4.9. I think the 1 minute chart, 1 hour chart may have the sort of you may have the sort of grid we want. Yeah, okay. So the stock, let's see now, it has actually given up some of the gains it ran up. It's intraday high 5.22, 5.22, $5.22. Okay, so this is the 1 hour chart. So it has between 5.28 and 5.02. So that intraday high 5.22 lies somewhere here. Okay, the market grid has expanded way beyond that. So it's looking down. It's pointing downwards. So the prospect of 5.18 printing is there, 5.12, but they are a decent amount of support, 5.18 and 5.12. Yeah, if it gets to such levels, it might get a bounce. But below them, there's also 5.09, 5.05, 5.02. Yeah, a decent amount of support all the way down. And indeed, some resistance ahead as well, 5.21. We also saw 5.22 on the 4 hour chart going all the way to 5.28. And then, wait, 5.22 is intraday high printed today. Yeah, there's also another 5.15, 5.16 here. Yeah, it's just below this. So, yeah, there's a chance that we might get a bounce again. But if it defies the support, yeah, it may still pick up a bounce from the lows of around 5.02. Yeah, that's what's going on right now. The stock is trending. Just see what you make of it, and I'll continue to update you. Thank you very much for watching this video.